Hey, it's Bill Gross, the LA probate expert, and interest rates continue to move up fast. And not only that, we ended up Friday on an upside. Let's talk about what's going to happen overall. Now, if you've been paying attention to what I've been writing about in my videos for the last few weeks, I've been talking about the fact that the interest rates have gone almost straight up over about 1% in the last 4 weeks. And they've continued. So every week I've written about it and talked about the impact of it. And it seems like it's become even more important. But let me show you what I think is even more important going forward. So on Thursday, I prepared this video. I do it on Sundays, and I start preparing it during the week and keeping content. I saw this great article from Bloomberg that rates jumped to the highest level since January 2020 in the last 2 years. And if you look at it, it showed rates going up to 3.69%. I started writing out my content. And so that's scary enough. Look at the rise from December, about 3.25 to 3.69. Look at from summertime, 2.75 to where we are now, over a percent higher than that. And that was scary enough. But then turn around Friday and look what happened at the end of the day on Friday, that last jump up. And well, the headlines of many articles on Thursday and Friday morning were rates headed towards 4%. On Friday, we broke over 4%. And look at that, straight up with no letdown in sight. Now, I'm not predicting the future. I don't believe in predicting the market. But ordinarily, markets have movement and direction. And at some point, either this has to reverse and slow down or break off or continue. And things tend to go in the same direction over time, meaning if we ended Friday on a straight up, who knows where it will be Monday or Tuesday. So definitely, if you're in an escrow now, pay close attention to the rates Monday morning. Get your rate lock Monday. I talked to loan officers who told me they try to lock the same loan 2 and 3 times. But look at the jump in rates. What was already a story last week and looking forward is becoming a dominating factor in our marketplace. So what does that mean to you as far as the market overall? Well, I don't know that we know yet what the impact is, but certainly when we see interest rates go up, it's always a concern of the market turning around. What do I mean by that? So take a look at the last 3 times that we've had market reversals. I'm saying market increases in rates, and we've had reversals in the growth of housing prices. So in general, when rates go up, it signals the turn of a rising market to a declining market. Now, it's not a guarantee, and it's not going to last necessarily forever, but certainly something worth paying attention to. And it makes sense as to why, when you understand that the increase in mortgage changes the payment that a buyer otherwise might be looking at. Take a look at a buyer at 2.75% on a $400,000 loan. The same buyer at 400,000 at 3.75, which is comparing the buyer a month ago to today, is going to be $1,852 a month, or an extra $219. That's like a car payment for some people. That's significant money. On an $800,000 loan, double that. That's $440 difference. Another way to look at it is for the same loan, what's the loan amount at a different interest rate? So currently, at a payment of $2,333, you can borrow $500,000. Just a few months ago, you could have borrowed $560,000. So for the same payment to a buyer, the house feels worth less by over 10%. And that is true regardless of the based on the loan amount, not just on the sales price. So at the higher prices, buyers put more money down, but not that much more. Many want to finance, put on 30, 40% and borrow 60 or 70%. But still, at $1 million, $2 million, these numbers will affect them and be real for them as well. So you can see that to a buyer, the impact in rates is significant. It is felt right away. It is going to drive the difference in the market. What's that going to do? Well, if rates just go to 4.05%, we've had so little inventory. We're talking about this week after week. It's not going to cause prices to drop necessarily, but maybe slow down. Now, in some micro markets or some cities, prices will go down in those slower markets. But generally, overall, that change in rate in and of itself won't cause enough buyers to back out to cause a reduction in prices. However, watch what happens next week and the week after, because if that hockey stick up continues or is a sign of another percent or two, then we may be in for trouble. Now, At the end of business on Friday, the Fed announced kind of a slower ratcheting down of the interest rates, ratcheting down the money supply that's been causing the rates to go up. And so it's perhaps in response to these concerns to try to keep things in a more even keel. But whatever it is, Monday, Tuesday, Wednesday, this week, take a look at those rates. Make sure if you have a loan to lock in, you get it locked in right away. You do not want to play with this market if you don't have the ability to cover yourself. So if you have questions on this, of course, what do you do? Well, if you're a buyer, get locked in. If you're a buyer, look for deals falling out of escrow. Inventory has been tight. This might be a chance to step in, particularly if you have a large down payment and the interest rate doesn't bother you so much. If you're a seller, make sure your buyer's locked in. Make sure they waive their contingencies. Make sure you get your disclosures done so you don't give the buyer a way to weasel out over rising interest rates at the end of the day if you don't want to. If I can help you, call me, text me, or email me. My contact info is down below. And as always, make this week your best week ever.